We start with the semi-sizzle, the group looking hot today, cruising through their 200-day moving average, and they've been the hottest area of tech this year. Check out some of these double-digit moves since the beginning of 2019 as the good news rolls in. So will semis become the hottest tech trade of 2019? What does that mean for the rest of the markets? A good sign, Pete Najarian?
Well, I think
terrible song, by the way, Pete.
Yeah, terrible. Sorry about that lead in.
But
I would say this in terms of the semis, and they were up 2.5% today, according to the SMH. But when you look at all the individual names right now in the semi space, I think what we're seeing is we see numbers that are better probably than people expected. But you said trade. I think from a trade perspective, yes, I love the trade. Do I think this is going to lead the market for the 2019? Absolutely not. I think there are other areas that can, probably more tech or somewhere else, maybe industrials. But I think the semis, we have these ups, we have these downs. We overshot to the downside. Now we're moving to the upside. I like what we're seeing out of them, but I'm a trader and I'm getting out of a lot of positions right now.
But I'll tell you what, the semis led us in 2018. I mean, let's remember that in March of 2018 is when the semis, measured by the SMH, hit their highs, and it wasn't until 6 months later that the S&P 500 hit their highs. The other thing about the semis, I would argue they're a lot more indicative of what's going on in the economy than even the transports are. If you overlay the semi chart versus the PMI, you almost get a perfect correlation, and you can kind of predict what's going on. So I would look at the semis as a leading indicator, and as long as they're going higher, I think you're okay.
Leading indicator, at least while things look like they're better than they were. And I think the case with the semis is one where people had priced in so much negativity. I think, look, right now it's not necessarily a question of demand. The question is really about how much they had sold off. First quarter, there tends to be a lot of optimism. There's inventory builds. I think we'll see by mid-year, third quarter, really what's there. Therefore, up 26% off the lows, outperformed the S&P by 800 basis points. And at the same time you see this outperformance by semis, you're also getting emerging markets above the 200-day. You're starting to see some other parts of this same trade, which bode well for the reality that this trade is more than just semis oversold.
I mean, part of this V, right, has been positioning, and I would think that the same is true for semis. They got absolutely crushed, right, when Apple reported, and we started hearing all those semis say, you know, things are weak, things are weak, things are weak, and we come around in January. Yeah. And it's off to the races.
It was interesting. Taiwan Semi reported a miss again in early-ish January, and the stock didn't go down. And so they had already rebounded some, but that should have been a tell they had more to go. I mean, if I wasn't going to buy the semiconductor index when it got down to like 1075 at the bottom, I'm certainly not going to buy it up here. I mean, I'll leave that to Pete, who had a great trade last night. It just seems like this. I mean, if you had gone to sleep September last day of the third quarter and woken up and seen the semiconductor index today, flattish, up, down a little bit. But oh my God, in between, I mean, that I just can't get on board here. I hope you're right. I hope it is indicative of an S&P rally to come.
So does that mean like the bear suit's in the closet? It's mothballed?
Yeah. What
This is the canary in the coal mine, or the leading indicator, or the thing that's going to presage a
Come on, Mr. Bear.
Zippity zip.
I mean, so until proven otherwise, you have to say that the semis going higher are a good leading indicator of economy. Now, we've had a massive run. Do we get some kind of a sell-off? Potentially. That's what stocks do. But I would continue to look at that as a leading indicator.
Well,
until that's different, I can't be that bearish.
I would say this about the semis. I like what we're seeing, and you look at valuations, they're perfectly fine. Matter of fact, in many cases, you're looking at almost single digits, Micron single digits, but you look at Intel.
Skyworks, the huge pop that we saw today.
Right.
Skyworks?
Well, and that huge buyback, all the different things that are going on right now in the semis, that's great. I love it. But I think it's trades. And everything that I see in front of me right now is, when you look at the option markets, which is obviously what I look at mostly, when I'm looking at the option markets, nobody wants to extend out. Everything is very short term. We're talking February expiration, March, but they do not want to extend out much further than that. And because of that, I think it's a great trade. I just don't think it's an investment.
I just think the problem here is, once again, the same problem we had 6 weeks ago, is that positioning now has gotten to a place where we're, first of all, from a momentum perspective or measure of how overbought or oversold, the S&P back to the highest 9-day RSI that it's had, seriously, since probably August. Same thing with the VIX, back down to levels that it got to the day before we actually, October 4th, started to spike and sell off. You've had a repositioning, bulls 5 weeks in a row, whether you look at bull-bear indicators, whether you look at the CNN greed factor index. all these things tell you that people have gotten kind of greedy lately, and that although we're not in a place where we're at all-time highs again, you're right back to the 200-day. This is a major level for markets, 2750 to 2800. And it's hard to say you should be very excited when the industrial production data we got out of Europe and the rest of the world on Monday and Tuesday was terrible. This morning, industrial orders out of Germany tell you that their economy is slowing fast. The trade balance from January in the U.S., this is all lagging, like no big deal, except for the fact that it's telling you that things aren't great.
So all that paper is short-term paper in terms of the semis. Is Apple an investment versus semis as a trade in your view right now?
For me, it is.
Or is Apple still a trade because of what the semis are telling you?
Right. Well, for me, Apple is still an investment. It's something that's been very, very long term. I mean, I've been literally in there for decades.
The semis were telling you bad things are going to happen at Apple before Apple said that bad things were happening at Apple.
They certainly. It turns out that they were right this time around.
Yeah.
They're not always right, but this time around they were absolutely right. And I think Illumina or one of the names out there that was. It's a much smaller name, but it's something that everybody looks at and they say, that's going to affect Apple. Absolutely. And this time they were right. But I think the thing that the challenge is Apple still, and I say it every night, but is it an iPhone company that is 62%, or is it the 38% that you look over and you look at the wearables in the others category where you're seeing the growth? And I think we are seeing enough of a shift and enough of that movement that I'm focused more on the growth than where we're shrinking right now with iPhone.
I mean, I think if you look at Apple that way, then sure, it can be an investment. For me, everything's a trade. And I wouldn't want to suggest that, if you haven't bought semis or you haven't bought Apple, that tomorrow morning you go out and buy them. I mean, wait for some kind of a pullback. I think there's nothing wrong with taking stuff off the table. In the semis, the one that I think is probably the safest to buy, check out AMD, because there's a little bit of a different story going on where they're gaining market share. So they might actually be able to grow, even if the entire semi industry doesn't do that well.
If not semis as a leading indicator of where the markets go, then what? Then what sector? What index? What do you look to?
I'm not sure. I mean, in the tech space, I'd rather have money in Alphabet, something like that, for sure. I just think it's the commodity-like nature of the semiconductor business makes me somewhat uncomfortable. But I'm with Pete. I think industrials are interesting, particularly if we get a trade deal. And I do think we will.
And if you look at the numbers we've gotten out of earnings season, so we're halfway through earnings season, industrials are the ones that have actually held their EPS estimates, at least going into the quarter, as well as any sector out there. So I agree. The problem with what people are looking at, if you want to be critical of the rally year to date, it's been on low-quality names. It's been on value. It's been on companies that actually are not free cash flow positive, that have high short interest, that were targets and could be defensive, believe it or not, in an environment where people were worried about growth. I think back to this conversation, though, tech is high quality, at least a lot of the names that we're talking about, and that's really the rotation that arguably, we haven't seen in a major way.
And to be sure, there are plenty of their high-quality names that have also benefited from this V-bounce. I mean, Boeing is one.
Boeing.
But let's say we get a China trade deal. Is that part of this V? In other words,
I think it's
actually
some of that V.
Yeah, I think some of this V is anticipation of that.
Asking.
I wouldn't be surprised to see the market go lower if we got a trade deal from this point. Because we've rallied so much, I think a lot of it's priced in. Maybe not all of it, but a good portion of it.
How can the market, I'm not asking you specifically, but then how can the market go higher if a trade deal means let's fade this news, and without a trade deal, we're going to go to 25% on China tariffs very quickly, and we've argued that somewhere along the line that's been a big part of this headwind. I don't know.
I think it can go higher. I think that companies have still reported somewhat conservatively because they just don't know. If you look at something like GM, I think we'll get to it, but, they want to keep something back a little because they just don't know what the environment will be. Mm-hmm. People love certainty. Investors love certainty. If we had more certainty of a trade deal, I think the market would go
And Jamie Dimon's talked about this. He talked about it back in December. He talked about, hey, with uncertainty becomes volatility, right? Well, people are getting a little bit more comfortable about the idea of a trade deal. I don't think we see a deal, but I do think we see progress. I think it keeps getting pushed out further and further.
The tariffs in terms of
I don't know about I think at least the tariffs won't escalate.
But the VIX is back below the long-term average.
Right.
And I have to say that there's still more uncertainty than there is certainty here. And we talked about EPS quality and where the EPS, I've certainly made the point that EPS for S&P, which has already pulled back about 3% on a year-to-date estimate, is certainly pricing in that earnings are not going to be as robust. But I think we're in an environment here where we still have a lot of questions.
If they're not going to be robust, then the one argument I'd say back is then the trade deal's not priced in, right? I mean, I think that if it's priced in, they are what they are. But I don't think it is priced in, and that's why I think there's plenty of room to run to the upside still in terms of industrial.